tariffs are a great way to tax your country. But Trump has the concept of, well, if he can meddle with the world order, he can come up with a way to soften the debt burden for government. Welcome to the Urban Property Investor. I'm your host, Sam Saggers, here to help you crack the code of real estate wealth. Today's show, Trump, the world order, pandemonium. We're going to discuss what's going on in the United States. It's certainly created a lot of fallout in the world economy. And of course, the stock market basically sank the other night, which is exciting when it comes to investment. Opportunities afoot, what to make of it all, where are the investment markets sitting? Let's have a good chat about tariffs. Let's have a good chat about Uncle Trumpy. Yes, that's what today's show's about. Welcome back, regulars. Play the program in double speed, get your life back. And of course, all the episodes are actually lessons on real estate, so feel free to go back in time. But I tell you what, I feel rested. I've got a new bed. Yes, the bad neck has been replaced. I no longer have a bad neck because I've invested in something spectacular. The world's best bed, the Rolls Royce of beds. Yes, I've taken on the Temper. Check it out. Google Temper. It's a lovely bed. I highly recommend it. I've never felt so refreshed in my entire life. So that's good. If we spend half our life in bed, we want to enjoy it, right? We want to enjoy it. So let's get into it. Obviously, Trump has imposed some pretty significant tariffs on other countries. Obviously, his justification is that there is a trade deficit between the United States and other countries. And of course, all of that is a bit of a smokescreen for effectively looking at America's actual real problems and trying a new way to actually approach fixing it. The United States administration is effectively bankrupt. And of course, they have a huge, huge burden of basically repayments and government spending, which they need to get under control. And of course, because their economy is kind of sinking when it comes to how the US government actually works, Trump, in all his wisdom, has come up with a new way to effectively tax the people of America by imposing tariffs on foreign goods. Now, of course, by imposing tariffs on foreign goods, you can, of course, protect local industry, but many local industries no longer exist, so there is really nothing to protect. And of course, if you look at certain goods, they are not ever going to be made in America. By way of example, if we think of just a bottle of champagne, you can't actually produce champagne outside of Champagne, which is in France. So what happens to a bottle of champagne in America? It goes up in price. Does it get replaced by a bottle of champagne from Miami? Well, no, it doesn't. It just goes up in price. And of course, tariffs are a way an economy can tax its citizens and justify it through global trade. And we've seen that here in Australia. Originally, our car industry was protected by tariffs. We used to produce cars here in Australia. There were plants in Adelaide, and we used to be able to build a car from start to finish. That was protected for many, many moons. And of course, that protectionism it kept the car industry alive, but it also created a lack of innovation in Australian car manufacturers. We ended up with big, bulky cars that couldn't fit in our streets. They weren't keeping in pace with things like electric modifications. They weren't designed for basically the more sustainable world. So what was rolling off Australian car assembly lines was big Holden cars that effectively were out of place with modern society. Why? Because they were protected by tariffs. And of course, the luxury car tariff has not been removed here in Australia. It still exists, but it doesn't protect anything that Australia has. It's just a tax. If you buy a car here in Australia, a German car, you're going to pay a tax for that. And of course, tariffs are a great way to tax your country. But Trump has the concept of, well, if he can meddle with the world order, he can come up with a way to soften the debt burden for government. And he knows that really the American economy is pretty well safeguarded off the back of American companies. American companies are incredibly, incredibly strong. Absolutely the richest companies in the world. The companies themselves earn more than some countries and significant countries. If you took the collective GDP of Alphabet, Facebook, or Meta, and you combine them, they're bigger economies than that of India. So the United States government kind of knows that its corporate companies are very, very, very strong. And ultimately, I guess Trump is betting that they can withstand this structural change in the American economy and really the global economy, which is incredible to see. But Trump is very pro lowering the cash rate in America. And of course, the cash rate in America is much higher than what it is here in Australia. It's around a percentage higher than what it is. And obviously, if you're going to rattle the stock market, if you're going to rattle the global order, you're going to see that in an instant moment through the stock market. The stock market is a very good lead indicator for the way the world is feeling, and really its impact is incredibly quick. But if we look at the United States, it's got significant federal borrowings. It's in debt, and obviously a lot of the debt it effectively orchestrates needs to be paid back. And really, if you look at where the cash rate is today in America and the cost to pay back the significant debt to GDP ratio in America, it's out of control. And that's why often, if you've ever watched perhaps the news or something, you see that the government in America can actually come to a halt because it runs out of money. And because it runs out of money, the parliamentarians over there need to all vote to basically issue more debt. And so debt's spiraling out of control in the United States government. But it's a tale of two worlds. You've got a government which is really in a lot of debt, and you've got companies in America that are the strongest companies in the entire world. So effectively, Trump is going to try and use the strength of the American company base and foreign companies trading their goods in and out of America to basically provide revenue back to the government of America. And hopefully for the government of America there, they can lower their debt burden and get back under control. Now, Australia's debt to GDP ratio at the end of 2024 was around 50%, which is considered at a world economic standard to be pretty good. Pretty good. Our LVR, if you like, based on our servicing, is at 50%. But America is well over 100%. There are other countries that are often referenced as zombie economies, places like Japan, which is at 255% debt to GDP ratio. And the American, obviously, economy doesn't want to become Japan. So Australia's probably in not a bad sort of place because we don't have the level of debt burden, though it increased rapidly through the COVID era when we did quantitative easing ourselves and released a lot of money into the economy, which ultimately led to a lot of inflation. And of course, when we look at the United States and we look at its corporate citizens, the revenue is just unbelievable. I mean, these are extremely, extremely wealthy corporations. Like Apple has something like $3 trillion sitting in the bank. I mean, this is just amazing amounts of money. And of course, you've got to hand it to America. They've kept their innovative culture alive, but they know they're under threat. They know that their economy is under threat because it's not growing as fast as really their biggest adversary, which is China. Now, I'm going to talk about GDP because China is growing at a GDP rate of 5% per annum. America is growing at around 2% per annum. So China is effectively growing faster than America. And often we just see that as a number, a numerical number. Australia grows at sort of 2% GDP. What does that actually mean? Well, it means the citizens in the country need to grow their wealth by 2% to keep up with where the country's going. But equally, the faster your GDP rate, the more you can actually see gains in society. And if you go to China, many parts of China are very modern places. They're incredibly well amenitized. The infrastructure is just world class. And it really comes down to the scale of their growth. If you look at, countries around the world and you look at America, America is very run down. If you go to America, its airports are run down, its roads are run down, even its social fabric is quite run down. There's a lot of homelessness. There's a lot of drug use. There's a lot of challenges in the United States of America. Conversely, if you go to an authoritarian place like China, it's very orderly, it's very well run, but equally because of its faster GDP growth rate, it's actually reinvesting in itself in a faster and more competitive way. It's out producing America. America knows this. And really, one of the ways America can deal with that problem is to impose tariffs to not only slow down America, but slow down China. And really, that's the game unfolding here. And obviously, the market was betting on a certain level of tariffs being deployed. It kind of knew tariffs were coming. What it didn't see coming was effectively the sizable amount of tariffs across other countries around the world. It knew that it was going to be a Chinese problem, but the market really didn't think that Mozambique would be paying a tariff. Didn't think that Madagascar would be imposed with a tariff. So the market has gone through a bit of a shock, and of course that has some trickle-down effects, which we'll talk about. But America is really trying to slow down China so it can reinvest in itself. And obviously, some local industries will be the beneficiary of the trade wars. some local manufacturers will be protected and be able to do really, really well. But China, which of course is a knock-off economy, has worked out how to knock off lots of American IP, intellectual property. And America is a pretty incredible country when it comes to its research and innovation. If you look at the biggest companies in America, they're generally tech-based companies. If you look at the biggest companies in Australia, they're generally banks, which says a lot about Australia's economy. Australia really does need to improve how it innovates and does R&D and builds more industry around itself. America's industry is world-class, but it's being knocked off in China. And you've seen that through, for example, some things like car manufacturing. Today in Australia, it's very common to see people driving a Chinese car, an EV, an electric vehicle from China. And they're pretty good. They're great little cars. You've seen them floating around. If you've ever been in an Uber, you've probably been in the back of not just a Tesla, but now you've been in back of a Chinese car. And really, the idea of that is that that downstream, we will create the technology in America, but we'll manufacture it somewhere else. Upstream to downstream is completely broken because basically by manufacturing it somewhere else, you're actually giving away the IP. And of course, we've seen this happen now where the manufacturer that was really downstream of the technological brains and wizardry is now reversing the world order by becoming actually or redeploying their manufacturing into doing it themselves, which again is creating a little bit of world pandemonium. And then you've had things that are really unfolding inside of the economy, where you've even got China emerging as a technological powerhouse with things like AI through DeepSeek, learning how to do it cheaper, faster, and better. And of course, this is a big threat to the American economy. And so Trump's gone hard. He's gone early. He's only been in power 2 months and he's shaking things up. And of course, in America, they have midterm elections where the Senate basically happens a little bit different to Australia. We have an election, and you basically have the House of Representatives and the Senate and the parliamentarians. Basically, you vote all at once. In America, you kind of vote for the lower house, and then 2 years later, you vote for the upper house. And so really from controlling the balance of power in Parliament as effectively, Trump's had to go early because there will be a midterm election. And if the world don't like what's going on, a lot of Republicans will lose their Senate position. So I would imagine that there's a lot of pressure going on behind the scenes politically to kind of sort out these tariffs and maybe peel back some of the legislation, the rules. But Trump, for the time being, is going pretty hard. And really, a lot of it is to do with government spending. How do you fix government? And obviously, Trump's gone really hard with things like Doge, Elon Musk trying to peel back the layers of government. If there's too much government, if there's too much spending on government, government becomes the main contributor of growth, and that can really mask real hidden problems in an economy. Now, if you take, for example, Australia's GDP growth, really government and government spending is really the primary mover of growth. Where they spend their money, from the NDIS to roads to you name it, They're effectively the number one spender. Our mining, investment, exports, imports is all down. So the government is really keeping things afoot, and their spending, which is an economical principle, is really one of the ways the economy is continuing to grow. In America, they've probably spent too much. Here we've been spending money on cost of living relief, the pharmaceutical benefit scheme, defense spending, all sorts of government-backed infrastructure programs. So if you took that out of Australia, if you said, well, let's not include government spending in the economic outlook of Australia, you would see that from a GDP point of view, we are not growing whatsoever. And so the point of the message is that you've got to strengthen your industry base. And will it unfold that way for American companies? They're already pretty strong. They're the strongest companies in the world. They kind of keep on keeping on. And really, if you think about America and the world order, it's really about the primary problem, which is public debt to GDP ratio in America. It's out of control. And, a 60% sort of ratio like Australia's at 50% would be good, but America's well above 100%. And alternative governments can buy American debt as well, which kind of exacerbates the problem. So Trump wants lower interest rates, and he has already been tweeting to the head of the Reserve Bank, the head of the Fed over there, start lowering the rates, big fella. And of course, news has just come out. For example, yesterday in the Australian Financial Review, the editor there proposed that Australia will need to now adjust its position on rates by up to 5 rate cuts. And of course, that's through really the gods of real estate can actually influence real estate. It can actually make real estate very, very valuable. And one of the sort of oxymorons of real estate, particularly when you've got a variable cash rate and interest rate, is in times of crisis, in times of uncertainty, the reserve banks of countries lower rates to increase effectively sentiment. And the byproduct of that is here in Australia, when there is a crisis at a global level, the rates drop, but that means that households have more money, and of course, property investors can buy more property, and the property market seems to win off the back of lower interest rates. Obviously, because tariffs are going to be injected into the American economy, taxes effectively, the person on the street is going to pay more for a hamburger. They're going to pay more for a bottle of champagne that can't be reproduced in Delaware. So they're going to be paying more. They're going to be paying more. And that in itself is inflationary. So there's going to be a level of stagnation and potentially inflation, but equally because the economy is in shock, in theory, rates could come down in the United States. And that's going to put a lot of pressure on the Australian dollar. Australian dollar, if our Reserve Bank doesn't move rates as well, it will affect the Australian dollar. It will mean that, we're going to be sub 60 cents Australian dollar, which of course makes imports more expensive because the world trades generally in the US greenback. So, it means that importing things based on a 65 cent US dollar or a 70 cent US dollar, if you're at 59 cents, you're simply just paying more for the same good. And of course, that in itself can be inflationary. So there's, I guess, a little bit of who knows what's going to happen next right now. But I think what we can say that there won't be a full meltdown because America's companies are too strong. They're not in debt, they're in surplus. The federal government of America is in debt. The companies of America are in surplus. And really, I think you're seeing the two worlds trying to sort of solve each other's problems, if you like. And of course, with Trump trying to basically slow down the Chinese economy as well. And of course, that has flow-on effects for Australians. It may mean that our economy begins to slow up as well. It may even mean that we start to see, quarters of very lackluster growth in our economy. It might mean that government needs to spend more to keep that economy moving. But I do think it serves as a bit of a wake-up call for Australia to kind of continue to R&D and try and grow its industry base, have more companies like Atlassian floating around. And of course, where does it leave the property market? Well, one could argue that lowering rates will have a positive effect on the Australian property market. We're all suspecting the rate cuts would be a little bit longer in the tooth, a little bit more elongated. Now reports are coming out that really the Australian Reserve Bank will need to start cutting rates from May onwards to balance the level of sentiment into the marketplace. So it's an interesting period, interesting to watch this unfold. The global economic outlook, it's going to have an impact on the money markets. Will real estate be the winner? Certainly one of those ones where, do you really need your CBA stocks or do you really need a roof over your head? So I always find in these kind of periods of uncertainty, real estate becomes a bit of a winner because it is a primary kind of need as a basic human need. Now, the other thing, if the cash rate starts to drop, then of course the low risk section of economics is Australian government bonds, US government bonds. They're basically zero risk because the government can fix them whenever they want. They can print money if they want. So you're never going, it's basically a zero risk move to have an Australian government bond. There is no risk. And if Australian government bonds start to drop and their value becomes pretty uninteresting, then you've got to go, well, if I adjust for the return of the risk of the bond, where else can I make money? And of course, that's where if the stock market's a little bit up and down and a little bit, effectively uncertain, a safe haven would be real estate because it will outperform the bond market and it will be less volatile than effectively the stock market. It's probably fair to say, though, obviously we've had a correction in stock prices. These things can rally and return to normal, but one could argue that US stocks were overvalued at the point of this kind of mayhem. And of course, maybe they're just returning to a value point, which they truly are, as opposed to some sort of future value which was priced into the stock. So interesting. Will interest rates begin to fall away? Perhaps they will. Could be one to watch. And of course, this is where I think if we were to see, say, 3 rate cuts in a row, the market could, and unemployment, not rise significantly, I think you will start to see a lot of pressure return to the real estate marketplace, which means a lot of early capital growth as the real estate market begins to re-rally. So you just bear in mind, if you're not invested, if you're uninvested, you've probably got about a 60 to 90-day window to get it back into the market before I would say rates start to really fall as part of the what next for Australia. We'll have to keep an eye on those inflation figures at a global level. We'll have to keep an eye on what money markets are doing overseas. There's a few moving parts to this, but overall, I would imagine, real estate could be a winner. All right, folks, talk soon. Thanks for tuning in to the Urban Property Investor. If you enjoyed the episode, make sure to subscribe on your favorite podcast platform or YouTube so you never miss an episode. I'd love for you to rate the show and share it with your family and friends. Let's spread the word about property investing. Stay connected between episodes on Facebook, Instagram, and LinkedIn. And check out the rest of our podcast network at positivementor.com.au. And if you're serious about growing your property portfolio, don't miss our complimentary Property Investor Nights. Register now via the link in the show notes. See you next time.